mga kaibigan, and welcome to another episode of In My Toolbox. This is your weekly talk show exclusively here on PHLV. Tonight mga kaibigan, we will delve into the realms of finance and business. We're going to explore pertinent topics aimed at providing insights and guidance. Mga kaibigan, it's crucial to emphasize that while we offer expertise, we are not legal or tax advisors. Therefore, the information shared here should not substitute to any personal advice tailored to your specific circumstances. Mga kaibigan, always seek the counsel of qualified professionals before making any significant decisions. Again, my name is Enrico. I'm an economist, financial expert, business consultant, and entrepreneur. Mga kaibigan, stay connected with me through PHLV Radio, Facebook, or drop me an email at enrico.inmytoolbox@gmail.com. So let's dive down into our topic, improving your credit score. Woohoo! Mga kaibigan, how's your credit score? All right. Credit, of course, is one of the most important factors in your financial life. We've been talking about business. We've been talking about finances for the last 3 years. You know, you and I, we need to know better by now. So having a high credit score, of course, has its advantages. Although, for example, if you rent an apartment with a low credit score, you know, well, they still, some still do accept you. But of course, working or improving your credit score still matters, you know, in the long run. And there are some key concepts that you and I should know about credit, and then to help and on how to increase your scores. Okay, so, but before that, let's talk about what a credit score is first. Okay, so a credit score, this is a 3-digit number on a scale between 300 and 850. So 850 being the best scores. So banks, credit card companies, and other entities that you conduct business with actually uses credit score for them to be able to determine the likelihood you or another person will be able to pay back the loan, or you're able to pay a bill. And so, for example, in an apartment that I mentioned a while ago, a property manager or a landlord, they actually screen tenants like you and me that, you know, they use credit score as a tool to help them, you know, determine if you are a reliable tenant who's going to be able to pay rent on time. Okay? So the higher the score, the more likely that you're able to qualify for loans, for, you know, or applying credit cards and getting low interest rates, you know, and a lot more other advantages. Okay, so typically, you know, score of 600 or above required for most of this. An example is the apartment communities that I was mentioning a while ago. So, however, mga kaibigan, if you have a lower score, you know, you don't have to worry, you know, because what is considered a good score varies depending on where you apply or where you use it. In that example, it's in an apartment, right? So paying a larger security deposit in an apartment, or getting a co-signer before they allow you, you know, to be able to rent an apartment. You know, so if you have a low score, you know, or a zero credit, those are the requirements when you try to rent an apartment. So how are this credit score being calculated, mga kaibigan? So there are actually 3 federal credit bureaus that calculates and then reports these scores. You know, you have Equifax, we have Experian, and we have TransUnion. So each of this bureau has its own algorithm that they use to be able to compute your score. So you actually have 3 separate credit scores. Each company uses similar factors to calculate scores, but they're not the same. The degree of how much each factor affects your scores, you know, it actually varies. So, for example, payment history on loans, payment histories on credit cards, and other bills. Okay? The other one is credit utilization ratio. How much debt you owe compared to the amount of available credit. So that's what you call credit utilization. How much you're utilizing your credit. Or you have this what you call credit mix. These are the types of credit accounts that you have. Or credit age. How long has this been credit? You know, how long you have had this account open. Or another one is how often you apply for new credit. So, since calculating credit score is very complex, it's, we're just here to at least understand which financial habits will have positively or negatively impact your credit score. For example, paying bills on time and keeping a low credit card balance, this actually items can help you lead for a higher credit score. So, improving takes time. That's why I want to talk to you guys about how to improve your credit score, right? So, but again, it takes time. It takes months or years, for you to be able to get to that desired score. But there are some steps that I can talk to you about that will help you build this credit score in the long run. Number one, check your credit score first online. Begin by checking your current credit score online, and then you can use, there are some items there or some websites there that can actually give you a free credit score services, or you could purchase scores from those three bureaus. Some banks also provide customers with credit scores, which sometimes are listed on your bank statements or when you have an online portal. Okay, so when you receive your scores, you'll also get information about which factors are affecting your scores. Which of those factors are affecting your scores the most. Recognizing these factors will be able to help you develop a plan or a strategy and be able to determine what changes that needs to be made. Okay? Another thing here, guys, on how to improve your credit score is, check credit reports, and once you check it, you can actually dispute these errors if you find one. A credit report is a record of your credit history. We know that already, right? So the report details how and when you pay your bills, and then also the amount of debt that you owe and how long you have been managing credit accounts. Since credit reports are used to compute credit scores, it's now therefore important to review them, okay, and try to look for some inaccuracies, because these inaccuracies will be able to drag your credit score down. So get credit report from all three credit agencies so you know where you stand across the board. So verify that information from each of this account is correct. Okay? So if you find an error, go ahead and dispute them mga kaibigan. So each issue with whatever agency that you saw that from, and then you need to ensure that there should be some changes that will be made. Requesting a credit report won't actually negatively impact your score if you order directly from the credit bureaus. Again, mga kaibigan, I want to make sure that you understand that. You requesting a credit report won't negatively impact your score if you order directly from the credit bureaus. So you cannot use, or you can also use an authorized company that can provide credit report to consumers. Like maybe you can look at annualcreditreport.com. This is a jointly operated by TransUnion, Equifax, and Experian. So you can just go there, guys, annualcreditreport.com. So federal law requires each of the credit bureaus to give a free credit report every 12 months if requested. So you can get a free credit score on that website. Now, okay, so it actually started, so many years ago that you can go to that annualcreditreport.com, and then you can actually order free credit reports, every week if you want to. So try to make a habit that you monitor credit regularly so you can spot those inaccuracies or those errors before these errors will be able to drag your score down. So that's the reason why, guys, you would want to make sure that you check credit reports and be able to dispute the errors that you find. Another thing that can improve your credit score would be paying your bills on time. The past payment history is one of the biggest factors when calculating credit scores, and it actually is seen as one of the best predictors of future financial behavior. So paying a bill late or settling an account, okay, or making a loan account for a lower amount than what you initially agreed will definitely negatively impact your credit. Late or missed payment can be viewed on your credit report for 7 years. Even if you finish paying off a collection, the account will not be removed from your report for 7 years. So paying just a few days late can do some damage to your scores as well. So all bills, including your rent, utilities, loans, and credit card bills, should be always be paid on time, all the time. Okay, your credit score will be able, you'll be able to increase. Landlords are interested in finding reliable tenants who will pay on time. So you would want to make sure that you keep that in mind. So you can use calendar reminders for automatic payments or automatic payments as well to help you make sure that your bills are going to be paid on time every month. So if possible, charge all your monthly bill payments to a credit card. This strategy simplifies paying bills and will actually help improve your scores before, using all of these cash payments, right? And then you'll be using a credit account that is going to be managed appropriately. Remember, mga kaibigan, to pay the balance in each full month, don't forget about that. So you'll be able to avoid interest charges. So if you don't have, the best payment history ever, okay, that's okay. Older late payments will have less effect on your score, and then what you're able to do is you just have to make sure that you put that in your calendar. If you're behind payment, work to bring those accounts current. And I know you cannot do that immediately, at least gradually over time. The sooner the debt is actually paid, the sooner your score will be able to increase. In some circumstances, mga kaibigan, if you miss a payment by 30 days or more, all you have to do is to contact your creditor, and you are able to set up a payment arrangement and ask for them, all this missed payment not to be reported to the credit bureau. If you can actually do that, give them a call and ask them that this may not be reported to the credit bureau. If you're struggling, of course, as I always say, please seek your financial assistance from all of these credible sources. Another way on how to improve your credit score, mga kaibigan, of course, is to pay off debt and keep those credit balances low. This is where what we talked about a while ago about credit utilization ratio comes into play. Credit utilization, mga kaibigan, is the amount of overall used credit compared to the amount of available credit. So if you have $1,000 of credit and you used $500 on that, your available credit now is just 50%. So you want to make sure your credit utilization, right, is not high. You're not using all those credit that's available to you. Credit utilization is another large factor in credit score calculation. A lower ratio will be an indicator that a person knows how to successfully manage their credit, and they don't usually max out credit cards. Essentially, mga kaibigan, you want to keep all of your credit balances low because a high outstanding balance can negatively impact your score, definitely. So it's recommended to keep your balance at least 30% or less of your total line of credit. Especially if you can't always pay your bills, in full every month. So you want to make sure that magic number, it's 30% or less. If you want to help your utilization ratio and increase your credit score even more, you have to work towards at least 10% or less. This, to calculate the credit utilization, your total debt divided by total available credit, is going to give you your credit utilization. Again, an example that I gave you a while ago. If you have $1,000 credit limit, and then you use $500, therefore, you have a 50% credit utilization. So your goal is what? Less than 30%. If you want it be great, at least 10%. With this credit card, your credit utilization on that example is going to be, well, at least you're in the middle. That is 50%. You would just have to need to pay more, more on that balance for you to be able to be on track. So at least I hope, mga kaibigan, that actually helped you a little bit to understand credit utilization. Another thing on how to improve your credit score, mga kaibigan, is to work towards a good mix of credit. So, credit mix, okay? So, it is another common factor that you'll be able to use to calculate a credit score. Managing different kinds of credit accounts shows that you are able to manage different types of debt all at the same time. So, if you do not have a diverse credit portfolio, don't start going out there and apply for more credit. That's not what I mean. But at least you understand what a credit mix is all about. So having a less diverse portfolio will not actually make your scores go down, but at least obtaining more types of credit over time, of course, alongside that, you pay them on time, will definitely help increase your credit score. The goal here, mga kaibigan, is to strike a balance between revolving credit and installment credit. Installment credit includes a loan where you agree to borrow a set amount and you agree to pay a monthly payment until that debt is actually paid off. So example, mortgages, student loans, personal loans, and auto loans, these are just what you call an example of installment credit. Unlike installment credit, mga kaibigan, revolving credit does not have a set end, or a set date or a balance. Revolving credit requires a minimum payment every month. At least you pay the minimum, right? Customers pay more than the minimum. That's great. But it is actually not required. So credit cards, like bank cards, right? Or maybe a retail card, are the most common type of what you call revolving credit. Whether you have a good credit mix or not, mga kaibigan, consider that debt you already have, and you must have to be able to create a plan that actually works best for you. So if you only have credit cards, that's okay. It might be able to help you get a small loan, yeah. But if you apply for something that requires a hard inquiry, it might be best for you to wait for a while, okay? So another way on how to improve your credit score, you might want to add this one, is to don't close unused credit cards or accounts. So if you're not using a credit card, just keep it there. Just don't use it, right? So even though because this is the thing, even though if you don't use a credit card or an account anymore, just keep it open. Credit history, the length of that credit history is a very important factor too when calculating your credit scores. Just keep it there. Just don't use it, right? Remember, the older the credit age, the better that your score will be. Closing an account, could also increase your credit utilization ratio. So if you close an account, the amount of available credit will actually be lower, raising your utilization ratio and increasing your credit score. So as long as you're not paying too much in your, in your annual fee, I know it's just gonna come out because hey, I'm not using credit card, but I'm paying an annual fee. As long as you're not paying too much, right? Keeping that old credit card open is still a great strategy for you to be able to build your score. So make sure, mga kaibigan, to use the credit card every now and then, just so the company won't close the account. At least, buy something a little bit, in 7-Eleven, and then that's it. At least you're showing the credit bureau, the company that you're using your credit card. So make sure that you use the credit card every now and then, just so these companies will not close it. So if you have a delinquent account or a collection account before you apply a new credit card, you must want to work towards paying the past due amount and then try to pay them on time in the future. These negative accounts will not erase from your reports, but it actually will be able to help you in the long run. Medyo marami mga kaibigan, right? So at least, we're actually putting some pointers out there how you be able to improve your credit score. Another thing that you may want to do is apply for new credit only as needed. Hindi tayo period doon, right? So apply new credit, not period. Only as needed. Although it is good to have a very diverse credit portfolio, just like what we talked about a while ago, just avoid opening too many accounts in a short amount of time, because you want to have a good credit mix. A quick buildup of credit accounts can also look very risky, especially for new credit users. When applying for a new credit line or a line of credit, a hard inquiry is always going to be a requirement. A hard inquiry, or sometimes they call it a hard pull, will be listed as a negative charge or a negative change in your credit score. Although it fades over time, too many hard inquiries could lower your score. Unnecessary credit could also tempt you to overspend, and actually will be able to gain more debt, and this gaining more debt will harm your score. Hard inquiries, mga kaibigan, can stay on your credit, for at least 2 years. So it's actually important that you know your credit score before applying for buying a car or renting an apartment. Because especially renting an apartment, property managers and landlords use hard and soft inquiries depending on their leasing processes. Okay? So another way on how to improve your credit score, mga kaibigan, is consider getting a secured credit card. We talked about this one many times already in the show, but then again, just topping into this topic again, managing a credit card properly is a great way to build your credit, right? So someone with zero credit history is actually seen as a higher risk than a credit user. So even though they manage their account responsibly. So a secured card is just like a regular credit card. Go to your bank, ask them about the secured card, right? But this card is backed by a deposit that is paid upfront. So if you deposit $300 there, they can issue you a $300 of a secured card. So the deposit amount is typically the same as your credit limit. So you make payments monthly like a regular credit card. But if you fail to pay the bill, the credit company could keep your deposit. So try to find a secured credit card that reports to all three bureaus so you can use your score on how you're actually using that secured credit card. So, you can use a secured credit card whether you're shopping whether you're shopping, paying bills. It's the same thing as just like a regular, ordinary credit card. Okay? So, start looking for what bank can actually give you a secured card. Keep this in mind, mga kaibigan, that although a new credit card can erase your credit mix and lower your utilization rate, the application will also result in a hard inquiry. This definitely will affect your credit report. So just be aware that your score might look like it decreased, but over time, it will move back up. Okay? So another thing to improve your credit score is to become an authorized user. So becoming an authorized user is a great strategy for people who have zero or little credit history. But, of course, having someone with great credit will be able to add you as an authorized user, and, they will add you into their account. So, users will add you to this credit file, lengthen your credit history, and will be able to lower your utilization ratio. If you're too timid to ask a relative or a friend to add you as an authorized user, you just want to make sure that you note that the account holder doesn't have to let you use the line of credit regularly or give you access to the account. Maybe they can just add you, but you don't hold the card. That's what it means, right? Okay, so improving your credit score, maybe you can ask for a credit increase. If you love to shop, don't use this strategy, right? Because raising your credit limit on one or more for your credit cards will actually lower your utilization score. So, for example, on that $1,000 credit limit a while ago, so if you're utilizing it 50% of the time, and now it's 50, they increased your credit limit to $1,500, and you still use $500, so you're using a third of that credit utilization. Okay, so as long as your balances don't increase as well, you keep that how much you're utilizing it, that will actually lower your utilization. Okay, so the higher the limit, the lower the ratio. So if you've missed the payment, asking for a credit increase, of course, is not recommended. You want to make sure before you increase, you want to make sure that you're paying your bills on time and your cards on time. So the credit card company could also see this as a sign of a financial crisis if you're not able to pay your credit card on time. This will definitely hurt your score. Okay. Now, another thing that you would want to look into just by improving your credit score is to find out the reporting date. This is what you call your statement date. You can pay off your balances each month, But if the payment is received after the credit card company reports to the bureau, your balance could appear as if it's still high. So if it's still high, again, credit utilization, right? This will be able to harm your score and negatively impact it. So if I were you, mga kaibigan, right now, call your company. Ask the deadline for the reporting, or what you call the statement date, and pay the bill before those closing date. So your balance could appear low, and ultimately, this will actually boost your score. Usually, somewhere about the 12th of the month. Call your banks or credit card lender, ask for that statement date. Another way to improve your credit score, mga kaibigan, is to use a credit monitoring device. There are actually several credit monitoring services that you can keep an eye on your credit, right? A credit monitoring services will actually alert you to any changes in your credit report, and they'll be able to provide monthly credit score from at least one federal credit bureau or credit agency. Some banks will actually provide all customers with credit monitoring, but there are also some services out there that are free or, could actually charge you a very small fee. And this will actually be able to help you prevent identity theft and fraud. And then if you see an unfamiliar new credit account opening, you can report it as a fraud. I, for one, use one of those credit monitoring services. Okay. Another way of improving your credit score, mga kaibigan, is avoid making large purchases. This idea might seem like, a no-brainer, but buying expensive items with a credit card is actually a mistake many people make. If you make a purchase with your credit card that you won't be able to pay back at the end of the month, the interest will pile up quickly, placing you further in debt. So remember, one of the main methods to improve your credit card score or your credit score is paying the bill on time, right? And again, just before the reporting period. So if you plan to carry a balance each month, avoid using your credit card, because this will not be able to help you improve your credit score. If an emergency arises and you must use your card, split the bill and make 2 payments that month if possible. Again, one before and one after that reporting period. Okay, and lastly, mga kaibigan, I could share to you about how to improve your credit score. Maybe is to, of course, always seek financial advice, especially if you're having trouble improving your credit. If you're struggling with improving your credit score, there's always going to be help out there. Seeking assistance will not negatively impact your score. Start by, contacting your credit card company. Some credit card companies have credit card hardship programs, and they will be able to lower the interest rate or waive some fees for customers. All you have to do is just to make that call. Consider reaching out to a credit counselor if you want to. There are multiple credible credit counseling services out there. And some are, you can find even some nonprofit who does this for free. And then, of course, there are always going to be services that charge a small fee. A credit counselor, mga kaibigan, can definitely help you develop a debt management plan, and then be able to negotiate to reduce monthly payment. So start looking for one. So when will my credit score improve? Well, since credit is very complex, and there's a lot of various risk factor, impacting credit reports and scores, you cannot actually accurately assume the exact time your scores will increase. The time required to build your credit depends on the negative information listed on your credit report, especially or including hard inquiries or late payments or collections or bankruptcies, right? So hard inquiries, mga kaibigan, will always stay on your report for 2 years. Remember that. So while other items like delinquency, this will be listed for the next 7 years. Bankruptcy will remain for 10 years. So essentially, there's no shortcut, in improving credit scores. Just be aware of anyone who claims that they can improve your credit in a very short amount of time. So you want to make sure, guys, that you know that there's no shortcut in improving your credit score. So improving credit might seem very overwhelming, especially dealing with these 3 credit bureaus that has, similar ways on how to score you, But if you need help, don't hesitate. Call those credit counselors or, somebody who's a subject matter expert on this one. Continue learning about the risk factors, and you'll be able to identify which of those things are negatively impacting your scores, so you can actually strategize. You can take actions, for how to deal to improve your credit score. So, and again, as I always say, have patience and practice good credit management, and that will definitely improve your credit score over time. Wow, I hope mga kaibigan, this actually helped you on how to improve your credit score. All right? Again, this is going to be it's a very short topic until our next episode next week. Again, here in my toolbox, my name is Enrico Pobre, signing off.